Hello! I am excited today. I know a lot of you, like me, are probably very confused and frustrated and wondering what's going on with the SBA right now. So I've been working with Kevin and Randy, my CPAs, and talking about the current situation, what our options are, what kind of assistance is available, what kind of tax savings that we can expect with COVID, and then beyond COVID, just what kind of common things that they see, what things that small business owners and self-employed people are not doing to take advantage of tax breaks. So with no further ado, I'm going to introduce you to Kevin and Randy. They're a father-son team, and they have been so awesome and super involved. So welcome, Kevin. Randy.
Hi, Jen.
Hi, glad to be here.
Thanks for the nice intro.
Yeah, I like to see what your backgrounds are. So is that your house or your office?
This is my home office. We're working out of our homes right now. We have a receptionist at our office working shortened hours, but we are both working from our homes.
Yeah, it's very interesting in this quarantine virtual world. It's like, is it just me, or I'm like really always curious to like what their house looks like?
I know.
So are we. I always look at the background.
Yeah, you always judge based on the background of what's going on.
I know, and it's like maybe that's just the real estate agent in me.
Yeah. Well, I have bookshelves and a map of Arizona and a map of the world, and our certificates are on another wall, and so
Yeah.
it's we're working in our office and meeting with clients face to face. But right now, this is what we're doing.
Well, we're in uncharted times, and we're trying to figure it out as it goes because there's just a lot of how does this work? You know, I was super excited to hear about the relief for homeowners because the last time we were in a recession, the only help was for the huge corporations, and jobs are so important. And we know that the self-employed jobs that the small business that keeps this country alive. And I was excited to hear that actually the small people like me there would be help for, but obviously I didn't make the first round of funding, and I wanted to pick your brain, but instead of just doing it with just me and you, let's do it for everybody so everybody can hear what their options are. So kind of tell me a little bit about what's going on in your world right now with all of the SBA assistance.
Well, it's been interesting. It's been interesting is the word I'll say, working with it. We were very hopeful and optimistic in the beginning when a lot of the relief options first came out with the PPP, Payroll Protection Program, the SBA Economic Injury Disaster Loans, all of that. And it's kept us, a lot of our clients busy, everyone who's going after those types of loans. So far in the first round, like you said, Jen, it has seemed to favor a lot of the kind of the traditional way of loans so far. The businesses that maybe didn't need it as much are the ones who got it, and it's left a lot of the small businesses in the dust in many ways, not all ways, but so far that aspect has been a little bit disappointing. I'd say about 10% of our clients actually received any of those loans so far of the ones who applied for them between the PPP and the EIDL, which has been, disappointing. But we're hopeful. There's that new round coming out here now with Congress approving that and Trump hopefully signing it. And we're hopeful that some of the small businesses that really need it, that employ others who, produce money and pay taxes and all that, will be able to participate in it this time around on that second round.
And I know for me, I had all my accounts with Wells Fargo, and Wells Fargo was, I guess, all the big banks or all the banks got the same amount of money. Is that right?
In most cases, Wells Fargo got cut out a little bit because of their history of, I guess, in the last few years they had with some of those account openings and things like that. they got cut out a little bit, so they got less than, for instance, their counterparts at like Chase or Bank of America. But yeah, for the most part, the big banks got a certain cut. The local banks, the credit unions, got another certain cut of those, and it's the same thing around on the second wave here, where each style, onion or over 50 billion gets a certain amount of loan allocations, depending on how many assets they have.
Yeah, and like, I mean, you're probably not going to know the answers to all my questions because I don't know, who knows. But why did some of these companies that didn't need the money get the money before the people that did need the money get it?
What was that, Randy?
Oh, why did some of the bigger companies get the money instead of like small businesses that really did need it?
Well, what we're hearing, can you hear me?
I can hear you, yeah.
What we are hearing, and the interesting thing is Kevin said about 10% of our businesses that applied have gotten the loans, and they are the ones that didn't necessarily need it the most. Now, they were like $3 to $5 million gross businesses. The $150,000 and $250,000 a year clients haven't gotten it yet. We haven't heard from any of them that have actually gotten it. But really, what we are hearing are the big banks took care of their big customers. People that are paying big fees and have one activity and have a high balances in their account. And again, it's the old way of doing it where they rewarded the people. When you go and get a typical loan, they only loan you money if you don't really need it. They want to make sure that you have plenty of money sitting there to pay it off if things go bad. And those are the people that seem to be qualifying right now. But we are hoping with the second round that changes. And Trump has really pushed for that to change. Trump did not intend for it to go that way, either did Congress. And I think they've made a good attempt to try to make sure that round two doesn't happen that way.
And do you know if there's more restrictions then on that? Because it sounds like, am I getting this right, that it was up the banks themselves, not the government, that was responsible for the way it went down?
Right. Yeah, and I was going to add that I think because it was in the hands of the banks, and they're the ones who the banks weren't taking the risk because the government was essentially guaranteeing the money. But because it was in the hands of the banks, they said, hey, we want to treat our big customers right. So I think they were coming in and kind of cherry picking who they gave the loans to. And there's supposedly going to be some restrictions on who they can actually give the money to, and some further restrictions on the second round that will, hopefully, the intention is, that they'll be more open to the smaller businesses, the ones that don't necessarily already have the capital, the ones who are really, the mom and pop type stores, and the ones who have employees who are relying on them to put food on the table. That's who it's really supposed to help. And it is, and the employees of bigger companies are just the same as employees of small companies too. So it's important that our government is helping everybody and that these loans help that. But the small businesses need to be able to get participation just the way that it was initially intended. So I think that second round, they're putting a few more restrictions on it, not putting so much control in the hands of the banks themselves.
It's crazy. If you're, I don't know, is that your microphone? I don't know, technical stuff here. So what would you recommend anybody that's a small business owner and they really do want to make sure they can keep their employees gainfully employed, and some businesses were hit harder than others, what would you recommend for them to do to be proactive about this?
In terms of being able to keep their employees on staff, and is that what you're?
No, to be able to have an actual opportunity for either the paycheck protection or the disaster relief loan.
Well, putting as many hands in the pot as you can with this right now. There's two things, like we said, with the payroll protection program, there's a couple ways to go about that. There's through, it's something we've talked about too, going through the bank itself or going through third-party lenders. There's, PayPal, there's Fundera, there's Cabbage.com. there's third-party lenders who are willing to be kind of that avenue for getting it. There's the possibility, especially in the second round, of switching your business to a local bank, switching to a local credit union. That has been hit or miss. It's worked for some, it's not worked for others. There's also, like we said, that the economic injury disaster loan, that's another possibility of, even though you might not get that payroll forgiveness part, you can get a very low interest loan from the SBA, and that's doing that directly through SBA.gov. It's putting another avenue of potential funding in your hands, in a business's hands from the government. And it's not as good as the PPP loan because it's not forgivable, but it's another avenue in terms of getting some money for these businesses. So one of the things we've really encouraged a lot of our businesses to do is try different avenues. Don't just do one thing and stick with that, and that's all you can do. Try not necessarily as many things as you can, but try different avenues to try to get funding, because you can't just rely on, Wells Fargo, or just rely on Chase or something like that, because if that one doesn't work, you don't want to put all your eggs in that one basket.
I did also apply with PayPal, and I know that is another company that you can apply with.
Right. Yep. PayPal is one of those third-party lenders that are kind of acting as an intermediary between the bank and the account holders at the bank. So that's another avenue. Again, I wish we could say here's a surefire way to get these loans. We all, for the past 3 weeks, we've been wanting to say that. A lot of it's let's try this and see if it works. And that's really the way it's been nationally right now. And that's all we can go off of, because quite frankly, the banks don't know what they're doing with this either. And they showed that, in this first wave, unfortunately.
Yeah. I was talking to Tina Tambour, she's a local economist here, and she was saying about the unemployment numbers are very misleading because it's including 1099 and furloughed workers, which they've never included before. And there's actually real estate agents here in Phoenix that don't have COVID, or they're not caring for anybody with COVID, but they're getting unemployment, and they wouldn't have had that option. And so what happens when this goes away? Like, that person's not going to go get a job. They're just going to go back to opening their business again.
Right. Yeah. The unemployment numbers have definitely shot up. And I mean, unemployment is one of those one of the areas really where it's a short-term fix. It's a short-term temporary fix to just try to get whatever you can working right now. To try to get some cash, some when money is tight. I mean, and yeah, it's been kind of a crazy thing for the state to handle. That's been another kind of a mess, is the unemployment payouts and implementation and all that. But I can't remember what was the question now that I was answering.
I know that's not directly tax related, but as a small business, I was talking to another small business owner who had called her employee. She had actually been the lucky one that got the loan, and she's like, we could open our doors, and they're like, well, I'm making $1,100 a week off unemployment,
right,
sitting at home playing Fortnite. I don't want to come in and actually have to work for the money to make $800 a week.
I know that's something we've been talking about, and it's a cap of 39 weeks, first of all, which is quite a while that you can be on this extended unemployment amount of 860 in Arizona. But that's a long time. And technically, if you get offered a job, you have to, from your previous employer, really anyone, you have to indicate that to the unemployment office, and then they're not supposed to keep paying you if that happens. But, that doesn't always come to be. So yeah, I think it's encouraging some out of work people that aren't thinking long term right now. They're just wanting to collect their $800 a week and not necessarily return to work because they're not thinking past the next 6 months. So it's creating some difficulties.
So if I was a small business owner my employee was not coming back to work because they just, didn't want to, and like what kind of rights would we have?
Well, like I said, Randy, are you muted or are you on?
There's something. Here you go.
I just unmuted.
Okay.
I was just going to say that we are encouraging small employers if and when that happens, and they offer jobs back and the employee doesn't take it, they need to contact the state unemployment office and tell them it's coming off their experience rating, so it's going to cost them the longer these employees go. So it benefits the employer to get with the unemployment office to tell them that they've offered such and such person a job and they've turned it down, and then our understanding is they're going to shut them down real quick. So, and again, every small business person that is paying unemployment tax, SUDA and FUTA tax, they need to be aware of that. So they need to shut it off as quickly as the employee says they're not coming back.
Okay, yeah, because it's like, obviously anytime there's opportunity, there's fraud and
Sure.
people taking advantage of the situation. In that case, and I'm not one of those people. Always been like, let's work harder in times of challenging, uncertain times. But like if I was an employer, I still have rights. I don't have to just keep this person and my unemployment insurance going through the roof because they don't want to work.
Right.
Right. Yeah.
It'll be a problem. There's no doubt about it. That was our concern when we first heard about it.
Now, beyond the paycheck protection, beyond the disaster relief, what other smart things can business owners be doing right now to protect themselves in uncertain times?
Kevin, do you want to take that? You can start.
Yeah. Something we've talked about a lot between each other, internally within our company and with a lot of our clients. As far as, I don't know about protection or getting additional loans and things like that. This goes beyond that because we've kind of covered that aspect of it. But really what we're focusing on with a lot of our business clients right now is taking this time, looking at the positive, taking this obstacle that we're all facing right now and trying to turn it into something positive that'll make our businesses stronger, that'll make each other stronger. And we kind of approach that in a couple ways. That's looking at, first of all, the thing that Randy and I are so used to is looking at the P&L, the profit and loss, looking at your income and your expenses and seeing what are those high ROI expenses that you have in your company. What can we take this time to lean out our business? Can we take this time to analyze our income and what the highest margin type things are? That's the very first thing we're really focusing on, is turning this time into, hey, maybe our business is down, maybe our maybe we have more time on our hands than we initially thought, but let's take this time to develop our business, work on those maybe not immediately income producing items, but look at the long-term picture of our business and develop our business plans, our marketing plans for the next 12 to 18 months, our strategic plans, our mission statements. Work. I know it might sound cliche or maybe sounds woo-woo or I don't know, but those are things that all business owners should be doing every year, and we kind of don't because it doesn't immediately lead to income. And now is kind of that time that we're looking with a lot of our business clients at trying to develop those things. And I think it's a great opportunity if you're not so busy or losing out on any income to take that time to do it right now.
Well, even if you are busy, carving out that time and making it in a habit, because cutting, when the economy is good, your business is doing good, it can make you a bad business owner because you can get away with making a lot of mistakes. But then when times get tough, you're forced to either be a good business owner or get out of the business, and like one thing we have been doing more as a team is looking over line item on credit card statements, even just beyond the profit and loss, being like, do we need this $25 subscription? Do we need this? Because a lot of times those add up and it's not that big $18,000 a month chunk. It's like all the 25 and 45, and it adds up to like $2,000 a month, and we're able to shave that off there.
Exactly. Yeah. I mean, it's something that we all should be doing every year, but we don't, because it's easy to have extra expenses when times are good and when profits are high, and when the money's flowing in. It's easy to add that extra. Oh, it's just $100 a month. I can afford that. And in times like this is when you sit back and go, that's costing me $1,200 a year over 10 years. That's $12,000. That's a lot of money at the end of the day. What could that be if I invested that in my 401k, or put it in a Roth IRA or something like that, instead of just kind of throwing it away, if you're not using it to produce income or to help optimize, streamline your business.
Yeah. And can you kind of like maybe share a story or some examples of like common things that you see business owners, mistakes that they make that they would save them money?
Yeah, we have a lot of examples of that. Randy, you want to talk?
I'm sure all of mine either.
I'll try. Is my mic working okay now?
No, there's your background noise is really loud. I don't know what's wrong with it.
Hold on.
Okay, I'll get started then. One of the first things we see, this is a big dollar amount, the things that we see a lot of spending on that I won't say doesn't need to be, but maybe could be cut off in times of where income's not so high, is rent space. Office rent, whether that's paying an executive suite or even a bigger office for those who have multiple employees. Obviously, some offices need to have the office space, but they don't necessarily need as big of an office space. So we see, $1,000 in savings over the year, or even if it's $100, that's one of the bigger things is office rent. And with that, a lot of if you're more virtual, your kind of rent costs are your subscription costs, your virtual type of meeting costs, things like that. So again, it's looking at, we just did this ourselves. We changed our webinar software. We were using GoToWebinar, which was a great software, but we were paying like way too much money for something that we had already been paying for with Ring Central that we could do, and we didn't even realize that because we were too busy. We didn't take the time to do it, and then we figured that out, a week ago, and we just saved a couple $1,000s, by doing that. Paying, or maybe not utilizing software costs. That's office rent, software costs. Those are the two biggies to me that add up to many, many thousands of dollars at the end of the year that we see over and over again that businesses can cut down on, at least, not necessarily eliminate, in some cases eliminate, but at least cut down on and divert that money to other places, that will have a higher ROI, like we talked about before.
And we've been in quarantine a long time, well, it feels like forever. One thing, and I don't know, that I keep hearing background noise, but I think more and more businesses are seeing that, we can work virtually. And some of those trends are going to be permanent or long-term and not just during this quarantine period, because it is more efficient, cost efficient, and time efficient.
I'm going to try to am I still having background noise?
It's okay. It sounds like a submarine or something. There's like some background. It sounds like there's somebody talking,
I don't know why. There's absolutely.
I don't know why.
Okay.
Well, shut me off if it gets annoying.
Okay.
But I'll say we were just talking with a doctor client of ours, and a doctor client is now forced to do telemed. And she was saying that when they come back on, they're going to stay with a certain part of their day, maybe even one day a week, but a certain chunk of their day, they're going to do telemed. So I think it is a very good possibility. In our business, we've either met face-to-face with clients, or they've just mailed in and dropped off. But we haven't done telephone meetings really with tax clients and accounting clients. They ask questions, but when we're reviewing things, we don't do it that way, but we're finding that it's really helpful, and we can give more information and better information because we can share screen and we can show, last year side by side with this year. And instead of just showing it on a piece of paper, we can show different things in graphs. So yes, you need to get creative with that and see where this can, how this can help you going forward in your business. The other thing I was going to say is not just looking at cutting costs, because nobody loves doing that. That's not very exciting to people. About saving tax money or saving what they're spending. But one of the things they need to do, and what we've seen clients do, is to get creative with their business. Like they're adding a new product type. And if they're a foundry, they are trying to say, what can we do around the COVID-19 to make things that out of metal where we can help and where we can increase our business and bring on a new line. We have a pest control company that has come up with a whole new treatment for their clients, both business and residential, to try to do treatments that go in and sterilize your business and all. So there are people that are being creative. On the real estate side, people are starting to say, well, maybe I need to really take this opportunity to get into rental management, offer management services to my real estate investors, or, and there's a lot of things they can do. And as you know, Jennifer, you're at the leading edge of this with what you've done in real estate. But if people could start tying in with their accountants or their lawyers or their mortgage brokers, you can have a client, instead of running all over town and try to get everybody to coordinate phone calls back and forth, just have a web conference like this and bring on the tax person to talk about, tax ramifications of what somebody's doing, buying or selling, or mortgage brokers, and get brokers involved. So I think we all need to be more creative at what services we offer, how we charge for those services.
I think his mic is going out again.
Yeah, I don't know why it keeps cutting out, but yeah, I mean, that's that it's something we've seen, and we've always believed, in America, we have some of the most creative people here, and we have the most amazing country where people come back from these struggles, from obstacles as a country historically, and it's going to be the same thing here, come out stronger after facing something like this. And the creativity of our country, our business owners and individuals, we think, we've talked about this a lot, is really going to shine here. Like Randy was talking about, new business models, new business services. And I think the thing we're going to see a lot of changes in how business is run as a result of this. I think a lot of businesses are going to lean out in the ways that we've talked about, and like you said, change some of their technologies. Again, it's something I know you guys have done in your real estate business with, being at the front of technology. But I think we're going to see a lot of that with firms that maybe didn't think of that before, that had the historically big offices and face-to-face, like we said with ours. We're rethinking our business with each day that passes. And I know, in terms of the office space and the way that we go about conducting meetings, and I know from the conversations we've had with many business owners, they're looking at the ways that they're going to change in a post-COVID-19 world. And I think we're going to see a lot of interesting developments here based off people's creativity.
I know we are a cloud-based brokerage with eXp Realty, which, people would be like, oh, we have brick and mortars. And it's like, it's really coming in handy now. We've been using technology for years, but one thing that we have found that's been more efficient of our time is using it at a higher level and more often. We've been doing the virtual 3D tours on all of our listings for years. And we've been doing virtual showings for as long as I can remember, but now we're just doing more of them. But instead of after the appointment, after we go and show them a house and get to know them a little bit more, and then discuss next steps. Now we're like, hey, when's a good time? Are you gonna be by your computer? I can share the listings I'm gonna send you, and then share my screen, get feedback, get deeper into what you're looking for. And we don't have to drive or go to Starbucks and we could just share our screen, and we're like starting to we just incorporated that into our process. And
Yeah.
it's going to save, not just like time and money, but also like the earth, where less pollution.
Sure. It's awesome, isn't it? Like how we're seeing that this can, make for better business. Not only is it cheaper, not only is it more resourceful, but it's making for more efficient business. And big businesses, small businesses, they're all seeing this develop here out of being forced to do it, but yet it's been a big benefit, I think, for a lot of businesses. We experience the same thing as you, Jen, with that, where we're saying this is better. This is better than meeting face to face. We're saving in a lot, not necessarily money in our case, but we're being better for the client, and I can definitely see that with your business and many others around, and like I said, big and small, whether it's big corporate offices with many employees or the very small businesses.
Yeah, and I was listening to Robert Kiyosaki on Lewis Howes' School of Greatness podcast this week, and I know a lot about his story, and I've always admired him. I loved his book that he has made millions and hundreds of millions of dollars off of. But he had, we just kind of we know this, but sometimes we need to hear it a few times, that there's more opportunities in a down market. There's more millionaires made. And if you stop letting fear and uncertainty get like taking control of your emotions and actually look for those opportunities, they're more abundant now than they were 6 weeks ago.
Right. Yeah. And that definitely in real estate, we try to look for that in things like the stock market, which we haven't seen for some reason. That's gone right back up. But definitely where we look for these times of down type of where there are opportunities when you're looking for them, and when you're actually not just dwelling on what's going on, but out there pounding the pavement and trying to turn this into a positive. And that's going to make a huge difference here in the next, in the recovery as we move forward, for sure. Looks like we had.
And
sorry, go ahead.
Sorry, I was with real estate agents, it's not like becoming an attorney or a doctor where you have to go to school for 10 years and go into debt, hundreds of thousands of dollars. It's for like the price of a Mastro's dinner, you can get your real estate license. And at the same time, it would take you to get CPR certified. You can get your real estate license and have a whole career. And HGTV has inspired a lot of agents to get into real estate because, you only show them 3 houses and they always buy one. But, now it becomes hard to compete when you don't really need a lot of expertise. It's just, I'm going to open a door and write a contract. But when it gets harder, like that's when our expertise is really, we can really rely on it. We have a time to shine and be like, yeah, we are full-time agents. Our value proposition is incredibly deep. Like this is our time to show our buyer and seller clients what's in our toolbox, because we didn't really have to bring out our toolbox as much as we had to when the market's just going amazing. Sure.
And that's a selling point going forward for you. And then, we survived the 08, market. We survived the COVID-19 market. We were able to buy X amount of, help our clients buy X amount of homes for, during that time. We were at the leading edge of that. Those are great things to be able to do and say, and, you guys can do that. I know. It's easy to make money in a good market, and it's easy, it's easy to look like a good business when times are good, but it's really when these times where you show, you separate yourself and you show what kind of business owner you are with this. And we're going to see a lot of that here in the recovery and all that, and which businesses come out of this, and really which businesses come out stronger out of this too.
And we know some businesses are not going to be here. This is going to take them down.
Yeah, and that's the sad reality of some of this too. A lot of the industries that just have no choice. Like some of the restaurants right now. Some of the clients we work with in the restaurant business, or those that just absolutely have no avenue right now for revenue because they're completely shut down from the government and they don't know when they're going to open up. You know, you can't just say, well, work harder, to a business who has no avenue of doing it when it's something maybe they did for 25 years, and that's all they knew. So there's where a lot of it becomes finding that creativity and maybe potentially trying to find those different areas of income, like Randy was talking about, some of those services, and that's one area that we're trying to help with our businesses.
And it's not obviously just a recession. It could just be a new competition. I remember Tony Robbins sharing a story about the Garmin, the company Garmin. They had the GPS that they would sell, I forgot what you called them, the TomToms.
Right.
And
yeah.
we have the TomToms, and it was great because that was like one of the first GPS systems. But then the Apple phone came out, and guess what came free on the Apple phone? Google, Maps. And now we didn't need this extra piece of technology for this extra cost. And that was the majority of their business. But they got savvy, and even though they never fully recovered, their Garmin watches have been profitable, and it made them a profitable company. But they had to innovate and they had to get creative. Oh no. Are you back?
Jen, I lost you. Yeah, I heard you talking about the TomTom and I lost you. I'm sorry.
Okay. No, I was talking about how Garmin, when their product got wiped out due to competition, they came up with watches, and it's been a profitable product for them. But they did have to innovate and get creative and pivot.
Mm-hmm. Pivot, yeah, that's the buzzword. Like in Silicon Valley and in the last 12 years or so, pivoting as technology comes in and all that. And I mean, it's something we should always be doing. But again, you get comfortable in your ways when times are good. And now we're forced in a lot of industries to have to pivot, and it's time to get creative. And we don't know what those things are going to be for a lot of these businesses, but it's going to be, the pivots and the new products and the new avenues are going to be interesting to watch over the next couple of years here. What happens as a result of this COVID-19 stuff, going on.
Yeah, it will be interesting, and it'll be. I know in real estate we have been going through changes like iBuyers and big companies that will buy our clients' home. They don't have to put them on the market, and Redfin, where they'll give you cash back at closing. And we've had to level up our value proposition for years because of the real estate industry. And it's good because at the end of the day, it's better for the consumer, and we should be on board with better for the consumer. We just have to level up on our end to make sure that we're competitive, and we might not be the cheapest, but we're going to be the best.
Mm-hmm. Well, and you're going to separate yourself by doing that. When we have this recovery, it's going to, I mean, to be quite honest, it's going to shake out some of the businesses that weren't operating at quite as a high level, and it's going to separate the ones who are when we recover here. So you're going to separate yourself by being able to be at the forefront of those things.
Now, kind of shifting the conversation to, I'd like to just open this up to more general. Let's not talk about COVID. We're in a normal market. I know one thing I had made a mistake as a self-employed person is to not be set up as an S corp. And if you can share anything like that you see that common mistakes that also small business owners and also real estate agents, that it's so many do not have a PLLC set up. Mm-hmm. They don't have bank accounts. It's all personal income, and it's not, even when you have your PLC set up, it's not designated as an S corp.
Right. Yeah. Well, now you're in an area we love talking about, tax savings and things like that. And Randy jumped in here. He came onto my computer, so we have kind of put both of us on the screen here, so we'll both talk. Yeah. But yeah, you kind of hit the two main ones. First of all, legal protection for any business, this goes for whether it's a real estate company or not, is setting up, if you're a Arizona licensed professional, to be a PLLC. That's the legal liability protection. No matter what, you have to set these up. The PLLC or the LLC, it costs $85 if you do it yourself through Arizona Corporation Commission. There's no and there's no annual fee. We're one of 5 states in the country that have no annual fee once you do that initially. So there's no reason at all not to have that liability protection. That's one of the biggest first mistakes we see. You want to say something?
Yeah, well, and a lot of people say to us, well, why don't I do that? If I'm a licensed professional, I have unlimited liability. And that is true when it comes to negligence, gross negligence, and things like that. That's why you have your E&O insurance and other liability insurance. But you still get afforded a lot of liability protection for just things that can happen in your business. Again, if it's professional liability, no, then your E&O insurance has to kick in. But you still get a built-in protection by forming the PLLC. You get it also with the LLC, but then you're giving up all the tax ramifications, which is the second thing you mentioned, and Kevin, you were going to talk about. It's just once you're making over $30,000 net in your real estate business or in any business, then we can start really saving you some tax dollars by having you elect to be treated as an S corp. And there's a whole listing of things you can do once you become an S corp. And you will save money. I mean, it's just guaranteed you're going to save money. One other thing I just wanted to go back to, talking about things changing, and then we'll talk about, maybe we can mention some of the things that people are not keeping in mind with the new tax, with the CARE Act, and they're forgetting things that are available, especially to real estate people. I mean, it's not singled out for real estate, but it impacts real estate people. But I wanted to say, getting creative. I don't know if you've paid attention in this market in Arizona. We have Harkins Theater, and Harkins Theater now is set up drive-by popcorn. So you can drive, and there was, yesterday they showed on the news a huge line, like probably 80 cars driving through to pick up movie popcorn so they could have it at home. So again, they just found a creative way of generating at least some revenue by selling their overpriced popcorn. And you just need to be creative. And then you see what all the restaurants are doing. You see what, again, in Arizona and other states, Fox Restaurant Group is being very creative at what they're putting together for family takeout meals, and they're offering good specials. So this is what we all need to do in our business. And so I just wanted to add that, since I didn't have a mic. But why don't we also just talk about some of the things, like yesterday we get a call from a client that says, I got my refund from federal, but I also got $2,400 dumped into my account. I imagine that's an error. I'm sure I'm not entitled to that. And we said, that's the stimulus payment. He said, well, I heard about the stimulus payment, but I figured it doesn't apply to me because I'm not affected by it. Everybody's going to get the stimulus payment, whether you're directly impacted or not. You don't have to prove anything. It's just based on income. And, if you're making, as a married couple, if you're making less than 150,000, you're going to get the full amount, and less than 75,000 for an individual. Right. But just don't assume that doesn't apply to you, because it does. But the other thing you ought to be doing is, we see a lot of real estate people who come to us and they're frustrated and kind of frozen, especially when it comes to taxes, but their whole business, because they haven't filed 1, 2, 3 or more years of tax return. This is a great opportunity to come clean. IRS is going to work with you. Yeah. While you're unemployed, while people are unemployed or less employed, underemployed, this is a time to get your tax returns filed, work out payment plans with IRS. They're going to be very incentivized to do that. Yeah. So take advantage of that. If you're somebody that has some tax years that you haven't filed, take this opportunity. It's very good. The other thing, they've suspended IRS collection activities right now. Yeah. And they, student loans, if you want to protect capital and save money, you don't have to pay student loans. There's no interest right now. That's part of the CARES Act. So there are things that are available to you.
That's a great point, with the IRS thing, with if you have back tax filing, you have past owed amounts, this is the time to really try to work those things out. That's something to hammer out again with any business owner we're talking about in times like this, where maybe 2020 is going to show a negative year, or you're making up for a past year. This really is a good time to make up for that. And then also,
they're a lot nicer right now. They're not going to stop them.
That's right. And Congress is putting a lot of pressure on them to work with individual taxpayers and business owners. So they're going to be very, when they're fully staffed again, they're going to be very cooperative. We always have good luck working out payment plans, and we kind of specialize in bringing people into the tax market when they've been avoiding taxes, and we try to get them back in the system. So yeah, this is going to be an excellent time to do that. I know that's more on a negative note, but if you do have that problem, this is a great time to get with somebody and try to work it out, or do it yourself, and try to get, we think you'll do better by going to somebody that knows what they're doing with working with IRS and what you can get away with and what you can't. But this is a great opportunity.
I would say 100% of the time, your time's more valuable in your business. I'm not even going to try to learn the tax code. I'll let you guys do that. John Harisco has a question. He says, so with PayPal, would that be through business loan offer that I regularly get in the mail, or through like PayPal credit, which I have? I know when I signed in on PayPal, John, there's on the homepage, there's a COVID relief, and just says learn more, and it goes through the PPP and the EIDL, and then you can pick which one, and then you could apply right on the website. It's very easy. It's like 2 or 3 pages. So just make sure you have your 940 form, your payroll calculations, and the last 4 quarters of payroll. Right,
the 941 forms if you have employees. Yeah, and pretty much the kind of the role we're seeing with everything COVID-19 related is it's different from the normal thing. Every bank, the PayPal, the Funderas, the third-party lenders, it's like you said, Jen, where they have like a different tab up at the very top in yellow or orange or whatever is click here for COVID-19 relief, or it's a whole different category on every level, SBA, PayPal, whatever, where they're it's a different thing from normal business financing options.
And if you're with Wells Fargo, just FYI, go complete their application, and that's great. And then right after you do that, they're going to tell you to complete it again, and maybe you thought you missed a step, so you do it again. Then they send you another one to say complete your application again, and that actually goes around 4 or 5 times until you give up. So
yeah, that's a fun little development. Wells Fargo threw at you again, huh?
Love Wells Fargo. No, but actually it was great, an opportunity, right? I talked to a rep at National Bank of Arizona, opened up an account there, talked to the rep, and we're actually going to meet as soon as this is all over, the quarantine, because it looks like we might have a really good business relationship, possibly. So, I'm like, thank you. There's a lot of good things that are coming out of this.
Exactly. Yeah. Well, that's what we're really trying to focus on, is some of the, obviously there's a whole lot of bad coming with this, but we can, if we're looking at the right side of things, we can make some positive changes and turn a lot of positive things out of this, for sure.
Well, I think we stopped streaming on Facebook. This is a new technology piece where we're using that actually allows you to stream to Facebook, YouTube, and LinkedIn at the same time. So we're trying new things every day, and it doesn't always work, but we'll have this video. And so the S Corp, obviously get yourself set up, give yourself a salary.
Yeah.
Did you want to say something on that? Or?
Well, and the salary can be a lot lower than you realize. It can be 25 to 30,000, depending on your income, your net income, and the distribution you're going to take beyond that. So, we can get creative with that. You just have to follow certain rules and jump through some hoops, but it's no big deal.
And here's what's really cool about the S Corp, though, because when we say S Corp to most people, it doesn't really mean much. It doesn't sound that cool. But the cool part to me, I used this last year. We had a new client who came in, and he was filing just as an LLC, as Schedule C on his normal tax return. And then he made about the same income last year as he did the previous year, and we filed him as an S corp. And he was about, I think it was like $110,000 or something like that he made from his business, and we saved him about $9,000 in taxes overall. By most of that was by converting to an S corp. And you're not always going to get that amount of savings, but you're definitely going to get big tax savings just from doing an S corp and by jumping through a couple more regulatory hoops that you have to with an S corp. But it's worth it. You save lots of money by doing it.
And you get more than that. That's just an example.
Yeah,
I literally priced the income and paid less taxes. I'm like, why didn't I do this the whole time?
Yeah, it's like a loophole. It's weird, but it's a good one.
Yeah, and I mean, it's another reiteration. Like, how many pages is the tax code again?
Oof, I don't know.
I forget the new one. I used to use the 1986 tax code just got replaced in 2017, and they added at least 1,500 more pages to it. So
we could either get really good at reading that book, or we could just hire you.
Yeah, that's what we try to keep up with full time.
And it's not on Audible, right?
No.
I think you'd fall asleep at any point if you had that on Audible.
Well, I've had a little insomnia lately, so.
Yeah.
Now, you had mentioned earlier, and this has happened to, it's happened to me. It's happened to how many agents where the tax bill comes, it's April 15th, and you're like, oh man, I have this big tax bill and I didn't make payments. What kind of advice can you give business owners to make sure that doesn't happen? And if we're going to be more savvier with our money right now, how can we be more responsible in making sure we're not caught off guard by a huge tax bill?
We tell people in real estate all the time, especially the ones that are just getting started, that they should take 30% of their every closing, 30%, and put it in a bank account, and don't touch it. Because it just snowballs on you if you do. And I know that's painful, but again, as an employee, you're doing the same thing. It's just forced on you. They're withholding the FICA tax, they're withholding state income tax, federal income tax. So to really make it smooth for you and to take pressure off, as difficult as it is, save 30% of every closing and put that into a short-term investment account where you can earn something, and then deal with it when April comes around. So the people that do that never run into problems.
Have you seen any kind of savvy system set up that a business owner where they've just been like, okay, I'm going to set a different bank. I'm going to use a different bank to send the money to, or a different account, or advising payroll. Okay, I want you to set aside a certain chunk, something where they don't have to remember to do it.
Yeah, it's easier to do with payroll. You can instruct your payroll provider, put $200 a paycheck, or whatever the amount is, 10% of my paycheck to my savings account, where I'm not going to think about it. That's an easy part as an employee. As a business owner, you can also do that depending on how you receive your funds. You can do the same thing.
But you do it through the bank will automatically take out X amount. Now, again, it's not a percentage at that point. They can't really do that because your closings are sporadic. But you can instruct them to take, and you can be working with a financial advisor that'll go in and take it out. So you set it up where they'll go in and take money out depending on how much money is in that account, and they'll invest it for you. And a lot of people have automatically $250 a month, $500 a month come out of their checking account and going to Fidelity or Vanguard or something for those purposes. And so just every month they have $500 taken out, or that.
And it adds up. I know I have with eXp Realty, they allow us to take 5% of our commission and buy stock at 20% off. And you could just sign up for it. And, last year I went in and I was like, I hadn't even looked at my stock account. I was like, holy cow, that's awesome. There was a whole little big chunk sitting there, and I didn't even know, I wasn't even paying attention, but I didn't even realize that 5% isn't a huge amount to take off of each check.
Right. And you didn't even think about it. And then you look and a year and a half later, it's worth, X amount of dollars. That's pretty cool.
Well, we're coming up on an hour, and I really appreciate your guys' time. I can only imagine how crazy and hectic it is. Is there anything else you would like to add before concluding?
I mean, I would just add we're very hopeful for a lot of our businesses and a lot of industries here, especially in Arizona, but really around the country, that we're going to come out stronger as a result of a lot of this. And you have to take the right steps and be responsible with things and trying to optimize. Get with, I mean, it's kind of a self promotion here, but get with your tax advisor. Do some tax planning for the year to try to optimize maybe a down year, down few months. You try to work out some of those strategies with those that are, that know your business.
And the other thing I would add is we always want to remain positive, but we talked about being creative, and we think as business starts back up, you're going to have to continue to be creative for a while, because we don't expect this to go up as fast as it went down. We were all brought to our knees very quickly, and we don't think this recovery is going to be a V. It's going to be the right part of the V is going to be extended out. You'll get back, but you have to be creative and you have to stay focused on your business, and it will recover. It'll come back.
Have a board of directors. I like to call them like board of directors. Your CPA, your real estate coach, your financial advisor, just all the important relationships you really should have as a business owner. Like, this is a good time to strengthen those relationships or start new relationships.
Yep, exactly.
Definitely. That's
and like you talked
important.
about banking, and we have a lot of clients who bailed on their bank during this. They bailed on the Wells Fargos and the Chase, the BNO Harris. They let them down. So they're making contact with small bankers that are doing more and will offer more services at a lower cost. So again, that's another positive that's going to come out of this by building new relationships.
Awesome. Where can we find you?
You can find us our website, tudoraz.com. That's probably the best way you can learn anything about us. Just our last name and AZ at the end for Arizona. TudorAZ.com.
You can put TudorFinancial.com, but the short version is TudorAZ.com.
Yeah.
And father and son, like, you guys always get along.
We do.
We get that question a lot.
We have our struggles when we're debating something and we're looking at something different, but at the end of the day, we always work it out. We always resolve the issue, and we've always gotten along very well.
We have a good, healthy relationship. We're very similar in a lot of ways, which I think makes it so that we kind of know how each other are thinking and how we approach things, and we can kind of team up well with conversations. And like you said, we have our arguments, but we overcome them and within a few minutes.
Kevin, did you always want to work with your dad growing up, or did you come around later?
I kind of always had in the back of my mind thought I would. I mean, I grew up obviously around this business. He was in this business since I was born, and I always kind of in the back of my mind thought I would, and I didn't know for sure that I wanted to, but I'm sure glad I did. It's worked out really well, and we're both really glad to be doing what we're doing and in the position we are now to be able to work with people like you, Jen, and your team, and a lot of these businesses and individuals. It's very rewarding, especially in times like this. And I think I speak for both of us with that, to be able to help a lot of people that are struggling right now. Yeah.
And I love family-owned businesses. I try to get my oldest daughter into real estate with me, and she didn't want to, but my 13-year-old wants to. So 5 more years and adding her to payroll.
Yeah. Good. There you go.
And you never know about other people when they go out and work in other jobs in the corporate world, and they might determine that's not for them, and they watch you and they see you happy and liking what you're doing, and they might come around and join you.
Yeah.
Well, we're growing, and we love strong, great, hardworking, grit heavy agents. So, but it's fun. Like it's really challenging to own your own business. And I heard myself saying the other day to myself, oh God, 2008 sucked. And I'm like, what are you talking about? The last recession made me who I am. You know, the getting through what I got through, some of the toughest times in my life, it has made me stronger and like not so fearful. And even though there's a little PTSD that came up when this first came about, like stopping myself and being like, look at the opportunities that were available in 08 and through 2010. Look at how many people made hundreds of millions of dollars. And in a situation with the grit that I have, the knowledge I have, the relationships I have, and just charging forward and taking my market share.
That's great. That's what it takes.
We love hearing that. And we have a lot of respect for you, Jen, and your team and what you guys, the way you approach this, and not just this, but before, you know, the way you approach things and with your business specifically. And I think you guys are doing a lot of the right things for sure. And that shows it, especially in times like this.
Awesome. Well, thanks guys. Thanks for your time. It was fun. It was, I know that a lot of people are able to, I'm sure they got a lot of value, and you may be getting some calls. So.
Well, thanks for inviting us.
Yeah, we appreciate it. That was fun.
Awesome. All right. Well, hopefully I'll see you Friday.
Yeah. We'll try to, we'll hop on.
Okay.
Yeah. Now that it's not so crazy.
Yeah. All right. Awesome, guys. Catch
Have
you
a good
later.
night.
Bye.
Bye.